Ladies and gentlemen, good day and welcome to the Gateway Distriparks Limited Q2 FY23 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. Today on the call we have Mr. Prem Kishan Das Gupta, Chairman and Managing Director, Mr. Ishan Gupta, Joint Managing Director, Mr. Samveer Gupta, Joint Managing Director, Mr. Rajguru Behgal, President Rail, Mr. Sandeep Shaw, Chief Financial Officer, and Mr. Manoj Singh, President CFS. I now hand the conference over to Mr. Prem Kishan Das Gupta. Thank you, and over to you, sir.
Thank you. Good evening, ladies and gentlemen, and a warm welcome to all the participants to the post-results earnings call of Gateway Distriparks Limited. We have uploaded our results, press release, and presentation on stock exchanges as well as company website. I hope you had an opportunity to go through the same. We are happy to report healthy growth, especially in the ICD rail business, which has been the major growth driver of the company in this quarter. The cash flows in the company are quite healthy, and our net debt stands reduced to rupees 270 crores at the end of this quarter, after incurring rupees 30 crore capex from our own cash. According to Credit Edge ratings, container rail volumes are expected to grow at a healthy CAGR of 15.6%, with a steady improvement of rail coefficient by 430 bps to 31%, and incremental freight volumes. The agency believes that the transit assurance under DFC aiming to squeeze the travel period by 40 to 50% for some of the major routes, and over 3 times growth in the movement of cost-effective double-stacker container trains by financial year 25 will accelerate this transition. As you are all aware, in September 2022, we completed the land purchase in Dhanakya near Jaipur to the order of 30 acres and have already commenced construction of a new rail-linked ICD in that region with a planned capacity of 125,000 TEUs annually. We also signed a share purchase agreement on 31st October 2022 to buy 99.92% of Kashipur Infrastructure and Freight Terminal Private Limited from its shareholders for rupees 156 crores. The transaction is expected to close by the end of Q3. The process to acquire a liquidating shareholders remaining 0.08% stake has also begun. The 41-acre facility has 3 rail sidings and 17,000 square feet of warehousing space, apart from the rail yard and container yard. Currently, the company provides terminal service only, while other rail operators provide train services. With this planned acquisition, we will provide exclusive rail services to this ICD and the last mile connectivity, in addition to the terminal services, thus transforming it into a multimodal logistics park. The company will be able to increase volumes at this ICD by a considerable amount by leveraging its network of ICDs and providing cost-effective rail services through the hub and spoke model. ICD Kashipur currently handles an average of 3,000 TEUs per month. We are currently experiencing a period of rapid expansion and we believe that the rail freight sector offers a great deal of untapped potential. We will continue to build more multimodal logistics parks in India's most important manufacturing and commercial centers going forward. With this, now I hand it back to the moderator for the Q&A session.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. We request the participants to please limit your questions up to 2 per participant at a time. Should you have more questions, we request you to please get back in the question queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Bhumika Nair from DAM Capital. Please go ahead.
Yeah. Good evening, sir. Congratulations on a good set of numbers. So just wanted to understand qualitatively, while we appreciate that you've shared the volume numbers for both CFS and rail, but at least if qualitatively, if you can comment on how has rail performance been, because there is an improvement in the margin profile on an overall basis that we are seeing. Any qualitative comments on that? And as we're moving ahead, we are seeing that the port volumes are kind of slowing down. What is the outlook in terms of volumes? That's question number one. And question two is, when we're taking up these new ICDs at Kashipur, which will get commissioned and start off with us from Q4 onwards and largely scale up into the next year, while obviously there will be decent volume growth as we consolidate operations and improve services, how will the margin profile be at these ICDs?
Hi, Samvid here. So just on the margins, it's following a similar trend to what we've seen in the past in both the segments of rail and CFS. Slight improvement is there on the rail side, so we see that going forward. On the volume side, while port volumes are down, our market share has gone up slightly in the NCR market, so we're up to 17% there. We continue being the market leader in Sahnewal, so we expect that trend to continue. And with these new ICDs, so Kashipur right now is doing 3,000 TEUs monthly. We expect, over a period of time that we should be able to increase this gradually, and the market potential is much higher. We can double it over a period of 3 to 4 years. Jaipur also we expect to eventually, after construction, will take a year and ramp up volumes a year after that. So eventually we expect to go up to a figure of 4,000-5,000 TEUs there as well.
And Bhumika, just to give you some idea, the rail margin is to the order of 9,500 rupees per TEU, and the CFS margin is 2,200 rupees per TEU.
Great, sir. That is very helpful, sir. I have more questions. Since restricted to 2, I'll come back in the line. Thank you.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, good afternoon. Thank you for the opportunity. My question was, if you look at the volumes of the CFS business, we see that it's 2Q FY22, the volume seems to have got restated. Can you clarify on that? In the 2Q FY22 results, it was 93,000 TEUs.
Yeah, basically, we changed the reporting method last time to include CFS empties also. So last year we didn't report CFS empties as part of the throughput. So to give a like-to-like comparison, we've provided, so all the throughput numbers that you see for rail and CFS include both laden and empty.
And was it the case earlier for rail where we used to have even empties as part of the total numbers? Or
yeah, so rail we used to report both laden and empty. This is because empty was a revenue earning thing for rail, whereas on the CFS side, empty wasn't generating as much revenue, but now we've seen some revenue come from there also. And just to keep a standard format across both verticals, we decided to include both laden and empty.
Got it. My second question was, in terms of the capex, how do we look at for FY23 and 24?
So for part of Jaipur, we've already announced we've done a capex of 30 crores on the land, and we'll expect to do another 60 crores on the development of the ICD. With Kashipur, we've announced the acquisition price of 155 crores as the EV, so there'll be some adjustments to that on closing. And then after that, we're still looking for one more location. Other than that, we'll be spending some money on existing locations and growth generally. While volumes at our existing terminals continue to increase, we need to increase the container capacity there. So we're looking at overall 250 crores capex going forward.
And this will be split in FY23-24, or you're talking only of FY23?
So apart from basically the acquisition and the Jaipur, there's a 100 crore capex for next year plan.
So just to clarify, 250 crores is Kashipur and Jaipur. Kashipur, once the deal is closed, it will be upfront payment. We are expecting that to be closed during this quarter. And Jaipur, we have already spent 30 crores, and balance 60 crores will be spread over a period of, say, 9 months. In addition to that, the third terminal that we are looking at, that will also be close to 100 crores. And there is an ongoing capex at the existing facilities, ICDs, where we have land bank. And as the volume increases, we keep on, extending the yard and the warehouse over there.
So roughly 200 crores each in FY23 and 24. Would that be a fair assumption to work with?
Yeah, we can say that anywhere between 350 to 400 crores in the next 18 months.
That includes Jaipur and Kashipur.
Understood. So what kind of peak data can we look at in terms of the balance sheet?
So we keep the net debt, we are aiming for net debt to EBITDA 1:1. Maybe at most we'll stretch it to 1.2.
Understood. Thank you. If I could ask just a clarification on what is the status of the DFC and how do we see that, further ramping up?
Yeah, hi, Ishan here. So there are some sections which are already completed and some which are happening soon. So I'll give you the schedule. Rewari to Madar, 306 kilometers is commissioned. Madar to Palanpur, 353 kilometers is commissioned. Palanpur to Mehsana, 75 kilometers is commissioned. And Mehsana to Sanand, 77 kilometers is commissioned. Now after this, the next section will be Sanand to Makarpura, which will take place by December 2023 for this Palanpur to Makarpura section. And separately from Makarpura to Vadodara, from Surat to Vaitarna and Vaitarna to JNPT, those will all happen over 2023 and 2024.
Understood. Cool. Thank you. I'll come back in the queue.
Thanks.
Thank you. The next question is from the line of Krupashankar NG from Spark Capital. Please go ahead.
Good evening and thank you for the opportunity. First question from my side is on the Jaipur facility. Is it fair to assume that the volumes would directly go to the respective ports and not be routed via Gari, thereby losing out on double stacking opportunity? Or is there another thought process on that?
So Jaipur is already going to be a double stack terminal. It's connected at the Fulera junction, so we don't have to bring it back to Gadi. Also, Jaipur is closer to the port other than Gadi, so other terminals of ours like Saneval, Faridabad or Kashipur and even Gadi, sometimes if there's no train, we might bring it to Jaipur and we can double stack from there. So we'll optimize depending on the requirement at the time. So we be running direct trains from here to the port. And we can also further hub it at a terminal in Viramgam. So basically it would more or less be double stacked throughout, and the service level will also be good because we can run mixed trains.
Understood. Thank you. And while we have given a guidance of 6 to 7% volume growth in FY23 earlier. After these, the Jaipur facility and the Kashipur facility, are we revising our volume guidance for FY23, and what would be the outlook for FY24, etc.?
So Jaipur volumes are, they'll only kick in, say, towards the end of next year, since it takes about 9 to 12 months to construct and start the ICD, and after that it takes some time to ramp up volumes. So we won't be adding that for this year. Even next year will be a very minimal number. For Kashipur, we've already said 3,000 TUs per month is what they're currently doing, and that will be added immediately, and gradually we'll ramp that up as well.
But so just a follow-up, so if I look at the first half volume growth on an overall basis, that's still at about 3 to 4%. And given that the EXIM outlook is looking a little bit on the weaker side, do you want to hold on to your guidance of 6 to 7% overall for the company?
So the 2 to 3% or 3 to 4% you're talking about is on a consolidated level, or you're talking on specific segments?
On a consolidated level.
Yeah. So the main issue I'll tell you there is that we gave up Punjab Conway CFS in January this year. So if you take that out on a existing facilities volume, we've had a growth of 16% in volumes. So that we expect 6 to 7% guidance to continue. In fact, it might be slightly better only, and this is without including Kashipur and Jaipur.
Understood. Thank you. I'll get back in the queue.
Okay, thanks.
Thank you. The next question is from the line of Abhishek Nigam from B&K Securities. Please go ahead.
Yeah, hi, thank you so much. Just one question from me. On the Kashipur freight terminal, my understanding is that the last 3-4 years, like even before COVID, there was they were kind of struggling to ramp up volumes. And even though one of the JV partners had guaranteed volumes to them. So I'm just trying to understand, if you could clarify on why were they struggling, and what are we trying to do differently now?
Right. So basically, this was doing about 2,000 to 2,300 TUs last year. This year the average is 3,000 TUs. The differentiating factor is that one is that right now the ICD is run by someone else and the trains are run by third-party operators. With us, we'll have a all end-to-end solution, and also using Gadi as a hub, we can offer a different service level which the CTOs operating out of there can't offer. So we can offer a daily evacuation. So cargo going by road to other terminals in NCR, or cargo going straight to the port by road, that can be converted to us. And this market actually, although it's 3,000 TUs right now, there's a potential size of up to 10,000 TUs, including nearby markets. So that's why we are confident we can ramp these volumes up.
Okay. Thank you so much.
Hi, Ishan here. I'll just add to that, and for the benefit of everyone else also, that this industry has changed, over the years, and it's not only a question about having an ICD or having a train which anyone can replicate. Over time, it has become a complex service offering which we offer end-to-end customized solutions. We get into the supply chain of our customers and we integrate our ERP with their ERP. We offer a whole host of solutions. So we are very confident that the way that we would run the ICD would be different from the way currently it is run by a terminal operator who doesn't have rail services. And already, after we made the announcement, even before the acquisition is complete, a lot of our customers and a lot of shipping lines have started approaching us and they want to work with us out there. So we are very confident of this volume ramp up coming in.
Perfect. Thank you so much.
Thank you.
Sure.
The next question is from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, thank you. Sir, you did mention that the market size for Kashipur ICD is around 10,000 TUs. If you can delve a little bit more in terms of who are the typical customers there, what kind of industry exists in this catchment area, and who are the competitors there, and what are the kind of capacities that exist in that area?
Just quickly on the competition, I should suggest that right now in the near 50-kilometer radius, there's only one other terminal, or two terminals of Concall. One is very small and barely having any volumes, and the other is the ICD in Moradabad by Concall. And about the industry, I'm just passing it on to Rajguru.
Hi, Rajguru this side. So there is a, if we talk about industry dynamics, so there's a lot of paper products, then import of waste paper, then there is chemicals, home furnishing, handicrafts. So all these commodities are there in Kashipur belt. Plus, the moment we announced this, so there has been a lot of interest shown by many of the shipping lines as well as the customers who had to go down to Moradabad. So there is the ICDs which are far-flung from Kashipur and Moradabad, so they don't have any option. So once we start our operations, not only that we'll be able to capture the Kashipur catchment volumes, but the other ICDs like Moradabad and all, so we are expecting then that we will be able to capture those volumes also. So if we talk about the other areas, there is a good industrial belt at Haridwar, Dehradun and Lalkuan, where all these paper importers and all these home furnishing chemicals and waste paper factories are there.
Okay. So, but within the immediate vicinity, let's say, as you said, Concall terminals are a little distance away, but within the immediate vicinity, are there any other competing terminals, or Kashipur would, our terminal in that sense, will offer an exclusive significant distance advantage?
There is only one terminal which is in immediate competition to us.
Okay. Sir, if you can tell me which terminal that is?
Just to clarify, only ICD Moradabad is the closest terminal next to us, which is about 45 kilometers away. So immediate vicinity, there's no other ICD.
Fine, got that. Also, we have mentioned the revenue from this terminal in our acquisition announcement. If you can give some indication on the margins and profitability of this terminal.
So the revenue actually is of the existing Kashipur terminal right now that we've given. That's part of the SEBI format that we have to give. But this revenue is only the figure of the ICD income that's coming. What's not being captured here and what the value we've paid for is the rail access that we'll have. So we'll have exclusive rail access here, and no one else will be operating. On the closing, we'll be able to give some more details about the type of revenue that we're expecting out of this terminal. But, just keeping in mind the rough rail margins that we have at Gari, we expect to add that here as well.
So you could expect a similar rail margin out of this terminal that you otherwise make in the rail business?
Yeah, slightly more actually, since the distance is longer from the port. So the further you are away, the higher the margin.
Right, sir. Fair enough, sir. I'll probably ask again after the fourth quarter. Thank you.
Yeah.
Thank you. Reminder to all the participants to ask a question. You may please press star and 1. The next question is from the line of Vikram Suryavanshi from Phillip Capital India Private Limited. Please go ahead.
Yeah, good evening, sir. Just wanted to understand, since we are adding terminals and that is happening quite fast, what will be the rake addition plans going ahead, and we'll also look at domestic side of a business and acquisition of containers. So if you can highlight on that, sir.
See, right now we have adequate capacity and we can accommodate these 3,000 to 5,000 TUs in addition to the existing volumes that we are doing. But going forward, we have plans to acquire the new rakes of high speed and high loadability. Negotiations and the model are under discussion. So from next year onwards, we will be adding, say, about 3 rakes per annum.
Okay. And I think you have already highlighted, but just to reconfirm, the Kashipur rail business, we were not a part of a third-party rail operator for them. So there was no revenue for us from Kashipur for the rail operation, which will be added now.
Yeah, there was no rail revenue from, we were not operating from Kashipur.
Got it, yeah. Thank you, sir.
Thank you. The next question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Good evening, everyone, and thanks for the opportunity. Congratulations for a good set of numbers. I have 2 questions. The first one is essentially an offshoot from the previous participant. You said that you'll be adding around 3 rakes per annum. So will the addition be through your, will it be captive or through lease?
No, we'll be doing it all on lease.
Okay. The second question is more of a strategic kind. What I see that, you have a couple of opportunities here, Kashipur, Jaipur, which are coming up. Then you highlighted that there is one more opportunity that you're looking at. So if you can highlight the catchment area of that, then, we seem to be on a capex mode now, adding new terminals. So just wanted to understand from a strategic perspective in the next 3 to 4 years, what kind of terminal network we are looking at, and are we also planning to go to eastern side of the country? I know our strength lies on DFC due to obvious reasons, but is there any thought process to try eastern side as well?
Yeah, hi, Amit, Ishan here. So after these 2 terminals, there are a couple of locations which we have in mind, and we are identifying land parcels right now. So at this point, we won't be able to comment on the locations, but once we finalize, we will share that with you. Going ahead, if you look at a medium to long-term strategy which we have, we want to develop terminals along the northwest corridor primarily, where we feel the strength lies, where we can use our network with the DFC. And at a later date, we will be also considering either the eastern DFC or the diagonals and the quadrilateral corridors which are being planned, because those will be very useful for domestic business. Right now, we are only focusing on exits, but domestic business will then make sense once those dedicated freight corridors are available. So that is the long-term strategy that we have for the company.
Could you quantify in terms of terminals, if I ask you, let us say, after 3 to 4 years, what kind of, how many terminals will you have or you are aspiring to have?
No, we don't have a fixed number in mind. We will see the strategy as it goes, but say 2 to 3 terminals, you can safely assume. Beyond that, we'll take a call as and when opportunities come.
Great, wonderful, and all the best.
Thank you.
Thank you. Reminder to the participants to ask a question. You may please press star and 1. The next question is from the line of Krupashankar NJ from Spark Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. Just one question on Kashipur. Wanted to understand that the current set of revenues, what has been recorded, is it because that facility was handled by Apollo Logistics Solutions and India Glycols? Is it fair to assume that only India Glycols volumes were handled and incremental catchment areas, what was stated, will be opportunities which can potentially drive volumes? Is it a fair assumption?
Sorry, that last bit was a bit muffled. You said, what about the catchment area?
So, incremental opportunities like paper, etc., would be something which was not handled at the facility right now. Is it a fair assumption?
So some of it was handled. So if I understood correctly, the earlier volumes, the captive volumes of IGL, that's only part of it. But majority of the volumes are non-IGL volumes here. So the additional catchment volume we'll be able to get because our service level is better. Because right now it's being handled as a single stack terminal without hubbing it anywhere. So the service level is something like once or twice a week evacuation. what we can do is a daily evacuation from Kashipur and bring it to our terminal at Gadi and then rail it out from there.
Understood. And given that the potential will be closer to about 5 to 7% of rail volumes on an per annum basis, you can expect that because of the higher lead distance, the realization would go up for the rail segment. Can you give us an indicative number as to what would be the realization from a Kashipur to a, let's say, a Mundra or Pipavav vis-a-vis what we're doing on Gari side or on a blended basis?
On Kashipur revenues and specifically, the realizations per TEU we'll be able to comment only after closing. But generally, yes, the assumption is that the longer the distance, the higher the yield.
Understood. And one last question from my side. We had indicated that the Indian Railways revising the pricing or rather the discounts on empty containers will be passed with a lag. So every cost aspect wise, we have passed through everything to the customers. Just wanted to check if that has happened.
Yes, whenever there are changes in rail haulage, it is standard practice, so it is passed on to the customer. Sometimes there's a lag, depending. With some customers it's immediate, with some it's up to 30 days. But all increases or decreases in rail haulage are passed on.
Thank you. That's really helpful. Best wishes.
Thank you. The next question is from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Yeah, good afternoon, everyone, and thanks for the opportunity. And congratulations for a healthy set of numbers. Now the question that I had was firstly linked to Kashipur. I wanted to get a sense of you having made a 160 crore kind of investment. For the rail services that you can offer from there at current volume levels, what kind of returns would you be earning on this investment, let's say in the first year?
So like we mentioned previously on the call, so we'll get back on detailed, numbers after we close. Only on revenue of the rail part. That's what we can only comment after closing.
Understood. The point I was trying to kind of get to was that was it an acquisition which is let's say an attractive acquisition on near-term numbers, or would we require 2, 3, 4 years to realize decent returns on this kind of investment that we're doing?
No, it was an attractive from the numbers point of view, also the payback point of view. We'll be able to share more details in December, but also there's a slight premium that's been paid on account of a running business. It's a 41-acre ICD that's generating 3,000 TEUs per month. So we did pay a price for that, but it's still well within our investment purview of like a good payback and a good ROI.
Understood. A related question, what is the prospects of expanding volumes so what is the capacity that you can reach given the assets that you have bought at Kashipur versus 3,000 TEUs per month that is a throughput today? Can happen?
On capacity basis and depending on turnaround time, we can theoretically handle, and with 3 rail lines, we can theoretically handle up to 10,000 TEUs if needed. But we don't see that number immediately. What we have projected is that within, say, a period of 3 to 4 years, we should be able to reach about 6,000 TEUs out of this location.
Understood.
But the land bank is enough to handle more if needed, and we'll also be exploring some domestic volumes going ahead, so that also can be taken care of.
Yeah, just to kind of put it in the right context, what you are saying is this can become as big a place as Jaipur can be. While for Jaipur, since it's a greenfield project, we are assuming 100 crores as capex. Over here, it is 1.5x that number. So some premium for running business. Yeah.
Yeah. And also this is larger than Jaipur. This is 41 acres, whereas Jaipur is 30 acres.
Understood. That clarifies. The second question that I had was more to how to think about the volume growth for the company. Now you said that the sector should grow, let's say, mid-teens. Given your focus on adding assets, how should one be thinking through from a medium-term perspective the growth for your company on the rail front?
Yeah. So, we've given the guidance of double digits, and this was before announcing Jaipur and Kashipur. So we stick to that guidance for the rail business. CFS volumes are flat, but if you look at CFS volumes on a like-to-like basis, when you remove Punjab Conware out of the equation, then we're up there also. But say this is the base year for CFS, so next year onwards CFS would be flat and double digit for rail, and adding Kashipur and Jaipur, we're looking at high double digits.
Understood. The other question that I had was more on the network that you are trying to set up and the advantage that may give you owning, let's say, a portfolio of terminals. And you talked about Jaipur in some context of it being a place where double stacking can happen. I'm just trying to kind of imagine with 3 terminals that you add, does the network advantage for you become meaningfully more meaning, let's say, sticky customers, higher margins, higher market share? Just trying to think through that.
Yeah, network is very important in this industry, and not just having a high number of ICDs, but having them in the right locations suits your network. So why it helps is that when firstly it's hub and spoke model which we use. So we can combine containers from 2 ICDs and run double stack trains for the longest part of the routes. Even Faridabad ICD, for example, is going to be on double stack route next year onwards. So we will have a double hub system. We will have the choice of running from any ICD to any port via any other ICD. So we can top up volumes, we can increase double stacking. Our rake requirement goes down compared to other, compared to our competition, because again of all the hubbing, and transit times are better, overall asset utilization is better. So there are multiple reasons why network advantage plays out.
Understood. Just a last question from my side. Given the capex that you are thinking through, which is a few 100 crores every year, does the dividend policy of the company, would it change in any manner?
No, we will continue paying dividend like how we have been. How we view cash planning is that with our current earnings, with the capex which we have announced, keeping the net debt to EBITDA ratio of between 1 to 1.2 maximum, and paying out dividend, that's how we are planning everything. In fact, we expect the dividend to go up this year compared to previous year.
Thanks a lot for the color. Those are my questions. Thank you.
Thank you.
Thank you. The next question is from the line of Shashwat Desai from Samiksha Capital. Please go ahead.
Hello. Can you hear me? Hello.
Yes, we can.
Yeah, we can hear you.
As your margins have increased at around 9,500 TU in the rail business, as the DFC part comes in and all other efficiencies you have, what headroom we have on this as volume increases?
Sorry, could you just start over? We missed the first part.
So, as your margins have increased at around 9,500 TU in the rail business, so I just wanted to understand what, as the DFC part comes in and other efficiencies you have, what headroom we have on this as volume increases?
There is definitely scope for growth here, but yeah, so as the DFC comes, then double stacking will increase, and when it goes up all the way to JNPT, that will also help. Faster turnaround of trains will also help. So, just for example, we used to have an average transit time from NCR to the port of about 72 hours. Now, as and when DFC sections have opened, we've reached up to 48 hours. And during peak COVID, when there were no passenger trains, we've done it at even 24 hours. So if we can hit the 24 hours number consistently, our margins will definitely improve. And yeah, the 25-ton axle train will come when the DFC is complete. So that will also increase the loadability, like I was saying. So that will be how we increase our margins. And as and when we're adding terminals, that's also helping out, and there'll be a shift from road to rail. So we expect as volumes go up, fixed cost per TU becomes lower, and our margins will improve.
So can you go to 10,000 per TU?
Cannot hear you. Mr. Desai, we are unable to hear you.
Can you hear me now?
Yes, we can. Thank you.
Yeah. So, do we have a target? Can it go to around 10,000 as DFC part comes?
Sorry, unable to understand, but if you're asking...
Can you please check your headset because your voice is fluctuating and your audio is not clear. Since there's no response from the line of Mr. Desai, we move to the next question from the line of Atul Tiwari from Citi. Please go ahead.
Yes, sir. Thanks a lot. Sir, my question is on Concall. So, I mean, if I remember correctly, you have briefly mentioned in the past that you may also be interested in that acquisition. Obviously, probably in a partnership with another partner. So, what is the thought process as of now? Because now government seems to have restarted the process, and are you going for it or you are not interested?
We won't be interested in Concall. One is that our balance sheet won't support such an acquisition. And second, the issues regarding land licensing fee are still not clear with this new Gati Shakti coming in. So we don't know how it will work. In the meantime, we're continuing to expand on our own, and that's how we'll progress.
Okay, great, sir. Thanks a lot.
Thanks.
Thank you. Reminder to all the participants to ask a question. You may please press star and 1. The next question is from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Yeah, thanks for the opportunity again. Maybe one or two questions more from my side. The first one was on capital allocation, and I understand that you are probably doing a good thing by investing in the networks through ICDs and taking maybe rolling stock on lease. Is there any downside risk to this strategy in the sense of you not owning rakes? What are the risks associated with this kind of strategy versus, let's say, a Concall who ends up buying all the rolling stock themselves on the balance sheet?
The lease is slightly at a higher rate compared to owning, so it would be it would be cheaper to own in the long term. But there's no risk as such because we are tied with long-term leases of 10 years, and we build in clauses regarding upgradation when it happens, and we can switch our trains to the newer wagon. So no risk as such.
So service levels broadly get maintained and are not sacrificed through such a strategy in any manner.
Sorry, you didn't get that word?
So service levels are basically broadly maintained, whether it is leasing or buying the asset.
Yeah.
Understood. Just one more question from my side, and this is probably a risk that investors typically point out that Concall is big and will become bigger post EFC, and other players would find it more difficult if they are not able to scale up. A, do you agree to that thesis, and B, with your network expanding, is that risk becoming lesser and lesser? Are you becoming more and more protected?
Concall has always been there since day one, and their market share has been going down consistently. And our market share has now, this quarter, our market share reached a level of 17% in NCR, which is the highest compared to any other CTO, and Concall within NCR has come below 60%. So I don't see a risk, even post DFC, we'll have access. 4 of our terminals, Garhi, Faridabad, Jaipur, Viramgam will all be on the DFC. The rest will be connected by hub and spoke. So I don't see any major change happening in competition with them.
Understood. And just one more last thing. You kind of mentioned, I think, a mixed kind of rakes and that leading to better yields. I'm assuming you're talking about domestic and export combined. And just trying to get the sense of whether that mix effect can be a meaningful driver of your profitability incrementally with the new network in place.
Yeah, by mixed rakes, we're meaning that basically if we're sending something from the north, we can combine on one train at Garhi at our hub volumes of Faridabad, Sahnewal, Kashipur, Garhi volumes, and we can send it to Viramgam. And these containers don't necessarily have to be of one port. They can be of Mundra, Pipava or GNPT, because then we'll bring it to Viramgam and we'll maximize the distance that we double stack this. And from there, then we distribute it locally. So that will improve our service level, and the containers don't have to just wait at the ICD for a port-specific train.
And does Jaipur change the equation for the better, or it's something that should be seen on a standalone basis?
Jaipur will help because Jaipur can also act as a hub, and it's already a double stack location. So it gives us more flexibility to use the hub and spoke to our advantage.
Thank you for clarification. Those are my questions. Thank you.
Thank you.
Thank you very much, ladies and gentlemen. That was the last question for today. Participants have missed out due to time constraints. They can reach out to the management and SGA team. On behalf of Gateway Distriparks Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your line.